Something strange is happening at Ford, especially after the company has pulled back on its electric vehicle investments, including canceling new factories and, more importantly, delaying new models. Ford CEO Jim Farley has refocused the company back into gas cars and hybrids. While some are cheering it on, saying that this strategy is working, the market doesn't appear to be so happy and remains unconvinced. If you read this article, written after Ford's first quarter results, you would think that Ford completely crushed it. It says that Ford beat expectations. They reported revenue of $42.8 billion, beating the $40.04 billion estimates. They delivered earnings per share of 49 cents, which topped forecasts of 42 cents. And earnings before interest and tax, or EBIT, of $2.8 billion was achieved, ahead of the $2.54 billion expected. Furthermore, it goes on to say that full-year earnings before interest and tax was tracking towards the high end of their forecast. And they even raised their free cash flow target. The article states that after hours, Ford traded 3% higher on last Wednesday's report. But the stock didn't actually shoot up when the market opened, and has instead remained relatively flat to being marginally down. Curiously, a separate article, also posted on Yahoo Finance, highlights missed expectations in the first quarter. While revenue was up 3% from a year ago, net income was down 24%, profit margin down 4.2%, and earnings per share dropped from 44 cents a year ago to 34 cents in Q1 2024. So what exactly is going on here? It seems that on the surface, Ford is cruising along, but digging deeper, there may be some major cracks in the story. But before we continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and quarterly financial data going back up to 15 years, and it's all freely available. The biggest story here is that Ford, along with other automakers, has made a great decision by investing in hybrid vehicles whose sales are up 36% at the company, while at the same time they're cutting back on EV investments, a sector which has seen slowing demand. Indeed, this move has been correct, at least in the short term. On Tesla's recent conference call, the company highlighted that they actually make more money off of their competitors moving back into hybrid and gas cars, as they will need to buy more emissions credits, which benefits the all-electric vehicle maker. But Elon Musk isn't really happy with this result, as it isn't aligned with Tesla's mission. Tesla, of course, for decades, has been the driving force behind the entire auto industry globally, making the shift to EVs. And so for them to see a pullback in EV investments is a step in the wrong direction. And also long-term, Tesla can't do everything on their own and requires the help of all of the major OEMs worldwide to build out infrastructure, supply chains, cut through regulations, etc., in order to help migrate the entire industry off of fossil fuels and onto electric, something that Elon Musk believes is inevitable, but simply aims to accelerate this process. Back in February, Ford announced a number of major cutbacks. They delayed their second joint venture battery plant in Kentucky and decreased the size of a new lithium iron phosphate, or LFP, battery plant in Michigan, as well as completely canceling a joint venture battery plant in Turkey. In hindsight, this actually seems like a good move, since the same message was recently echoed on Tesla's conference call that the EV maker was doing something similar. There is basically a glut in batteries, and suppliers are now pricing batteries very competitively given the excess supply. Tesla also doesn't need to push full force into batteries with large investments at the present time, since there's no rush, and they have all the batteries they need from suppliers and also from their own manufacturing of 4680 cells, mainly for the Cybertruck. As a matter of fact, given that many automakers have pulled back on EV investments and sales of electric vehicles, and volumes have been down in the first quarter, this is actually helping Tesla get great prices on batteries, since they're still very much so a major player in the game. Not only that, but as Elon Musk stated on the conference call, Tesla will be releasing new, cheaper models in 2024 that will make use of their existing production lines. This makes a ton of sense. Batteries have become cheap, and EV sales have slowed, and so now is the perfect time to release new models to garner consumer interest in segments adjacent to the Model Y and Model 3. And the costs and prices will be lower because the core input, the most expensive part of the vehicle, the battery, is experiencing dramatic pricing pressure. However, Ford may have made a misstep here. They go on to state, again back in February, that we are further adjusting installed capacity to match demand, reassessing vertical integration in new battery chemistries, adjusting Gen 2 products, and potentially their launch timing to ensure they meet our criteria for profitability. This seems to be the opposite of what Tesla is doing. It made sense for Ford to pull back in battery investments along with what Tesla did. The main purpose of making your own batteries is so that you have enough supply. Batteries have historically been highly constrained, and US incentives have spurred domestic production. Sure, companies like Tesla and even Ford are working on new chemistries and techniques to enhance the user experience in terms of range, charging speed, longevity, etc. But today we're seeing LFP batteries, sort of inefficient but low cost, make their way into most electric vehicles, thereby demonstrating that there are effectively plenty of batteries to go around. However, Ford just said that they were pulling back on new product offerings and the timing of their respective launches. Meanwhile, Tesla just accelerated their new product launches. The latter is exactly what you want to do when your inputs become cheap, whereas Ford may be hurting themselves in the future, giving Tesla an even further lead. Pickup trucks, for instance, are Ford's bread and butter. The F-150 is not only the best-selling truck in the world, but Ford relies heavily on it as its cash cow. In a world of electric vehicles, Ford needs the F-150 to live on as an EV to drive the future profitability at the company. However, we know that the F-150 Lightning hasn't been selling well, as we've reported in past videos. And so one of Ford's next-generation products is a next-gen pickup truck, something that they desperately need to reinvigorate their electric pickup truck line. But instead of doing that, they've intentionally delayed it due to a rough economy, giving Tesla a wide-open playing field with the Cybertruck to dominate the EV pickup truck market. Ford beat Tesla to the punch in terms of delivering an EV truck first, but now Tesla is producing roughly 1,000 Cybertrucks per week, which by year end should surpass Ford's electric vehicle output if nothing changes. Ford was in the lead, and now they're stepping aside and basically allowing Tesla to easily enter the pickup truck market, something that won't bode very well at all for Ford's long-term future, and the repercussions are starting to show up in Ford's financials. Ford Model E is Ford's electric vehicle division. Volumes are down 20%, but revenue was down an astounding 84%, and they blame it on industry-wide pricing pressure. This is code for Tesla's continual price drops crushing the entire EV market, and perhaps even the gas car market as well. Tesla has much better offerings in place, and when they lower price, everyone feels it. The scary thing is that Tesla has barely ramped up the Cybertruck yet, which is targeted directly at Ford's most important business. Ford also cites flat costs, which might be impressive given that volumes dropped 20%. But Tesla isn't sitting still. Look how they're taking apart the Cybertruck piece by piece to work with their teams and pull out costs everywhere they can. I'm betting that after production rises and they deliver a large number of high-end Cyber Beasts to early adopters, Tesla will start cutting Cybertruck prices. Ford may be in for a rude awakening if and when that happens. Meanwhile, Ford's earnings before interest and tax plummeted twice as much as last year's loss, while for the first time Ford says margins are not meaningful, they indeed are. The number should read negative 1,320% margins. They sold $100 million worth of product, but lost an astounding $1.3 billion in the process, demonstrating that legacy OEMs still haven't figured out how to make profitable EVs. Now, even the gas car business under Ford Blue is getting destroyed. Revenue down 13% over last year, which has caused earnings to drop 65% to $900 million from $2.6 billion a year earlier. And again, the electric vehicle onslaught has barely even started yet for Ford's gas car division, in terms of the Cybertruck going head-to-head with all forms of the F-150. This back and forth between gas, electric, hybrid, back to gas again, shows a complete lack of focus and future vision at Ford. Now, the brightest spot at Ford is actually their commercial services and distribution segment, which is indeed doing extremely well. Ford Pro includes software, services, Super Duty vehicles, and their transit vans, all excellent businesses to be in. But the company seems to continually get squeezed into bigger and bigger car segments. For instance, they sold off all of their small cars except for the Mustang, and moved into trucks and SUVs. Now those seem to be under pressure, and they're pushing towards vans and Super Duty trucks. Soon there may not be any market left for them to move into, as electric vehicles seem to be steamrolling them one segment at a time, among other market forces. Look how Ford's EV division lost more money than their gas car division made. And so yes, the EV industry is going through some turbulence, but you would expect deep-pocketed OEMs to push through this uncertain time with big investments in next-generation products, so that they can come out of this stronger than before. Instead, Ford has taken a step back into the realm of gas cars and hybrids, while delaying new EV products, while Tesla has pivoted to bring new models to market faster, all while the Cybertruck ramp-up continues at a frightening pace. So do you think Ford CEO Jim Farley made the right move to pull back on EVs amid a difficult electric vehicle market, or should Ford have stayed the course? And what do Ford's first quarter financials tell you about the future of their gas and electric vehicle businesses? Don't forget to watch my last video on Tesla firing their entire marketing team. Please hit the like button and subscribe, we would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.